In this video, I am going to discuss question number 5, part A, that is from partnership. Came in the year 2020. Accounting. Partnership question also is important because you have to take 5 questions out of 6, but sometimes question number 6 will be difficult. Therefore, anyway, you will have to select question number 5, part A, especially from partnership. Therefore, you have to practice more and more partnership questions. Today, I want to discuss with you partnership question came in the year 2020, paper 2, question number 5, part A. Here, question number 5, part A, Nethu, Muthu are carrying out the partnership under the following condition. This is the agreement. This is the agreement. Right. This is the agreement. You are given the agreement on the top of the question. Then we have to read carefully and understand. Then you are given a trial balance. This is a trial balance. Then at the end, you are given another 6 adjustment, 1 to 6. Finally, you are asked to prepare income statement of the partnership for the year in 31st March 2020, capital accounts, current accounts of the partners for the year in 31st March 2020. First, you have to read the question and draw the given formats, income statement format, including appropriation account. If you take sole trade income statement, no appropriation account, but in partnership income statement, that is a special part, appropriation account. Below the net profit, you have to produce appropriation account. In the appropriation account, we distribute net profit calculated by using different ways among the partners. Then capital accounts and current accounts. First, you have to draw the given formats and name all the headings. This is the income statement for the end of 31st March 2020. You can take full page because here they have given you cost of sales. Therefore, no need to have cost of sales calculation in the format itself as you are given. Then you can take full page to cover the income statement, including appropriation part, and name all the headings. Then secondly, you can draw capital accounts as there's a new partner came to the business, Ganga. You can have 3 columns both sides. This is the horizontal format, Nethu, Muthu and Ganga, Nethu, Muthu and Ganga. Then you can draw current accounts, including 2 columns, because in the current account, we will have record only what is done to all partners. Right. Then you should be familiar with the formats. At the examination, you read the question and draw the format and name. Right. Then we will come to the agreement part. We normally record first details given in the partnership agreement. Nethu and Muthu share profits and losses in the ratio of 2:1 respectively. Each partner is entitled to a monthly salary of 50,000. Monthly salary of 50,000. Right. Here in my screen, there's a line. Therefore, you can't see 10, but it should be 50,000. In the original paper, they have mentioned 50,000. Monthly salary of 50,000. Right. When you remove last 3 zeros, it will be 50. 15 to 12, 600 per one partner, then salary is a way of distributing net profit among the partners. Therefore, we record these things in the appropriation account just after calculating net profit. And we pass the double entry between appropriation account and partners current account. Then salaries paid to entitled to partners, debit to appropriation account and credit to partners current account. 650 into 12 months, that is 600 each partner. Then you can debit to appropriation account like this. Salaries Netu 600, Mutu 600, total 1200. And you can credit to partners current account, saying salaries Netu 600, Mutu 600. Right. Then second point, each partner is entitled to an annual interest of 10% on the opening capital balance of the year. Right. Normally we are asked to pay interest on capital for the closing balance, but here they have asked you to pay interest on capital 10% on opening balances. Therefore, be careful. We have to select opening balances and pay the interest 10%. That is also paying interest on capital, also a way of distributing net profit among the partners. Then 10% you can select. Here you are given capital account balances Netu 2000, Mutu 1000. Out of 2000, 10% means 200. Out of 1000, 10% is 100. Then 200 for Netu, 100 for Mutu. That is also way of distributing net profit among partners. Then therefore you have debit to appropriation and paid to partners current account. 200 first partner, 100 second partner, interest on capital Netu 200, Mutu 100, total 300. Interest on capital here, Netu 200, Mutu 100. Right. Likewise, we have to take one by one. The next point, the goodwill of the business is adjusted through the partner's capital account. Normally, if you are given this adjustment, it is easy for you to do. If you are asked to adjust capital through partners, if you are asked to adjust goodwill through partners' capital accounts, what I do, you take the total goodwill calculated and you can debit to partners current account, capital account according to their new profit sharing ratio. Then you can credit to partners capital account according to their all profit sharing ratio. I will say it again. If you are asked to adjust goodwill through partners capital account, what I do, you have to debit all the new partners capital account according to their new profit sharing ratio, and you have to credit according to their all profit sharing ratio in the capital accounts. Right. Then when you read the question, you will find the goodwill at the end. In the adjustment number 6, you are given the goodwill of the business was estimated as rupees 1,500. In this, as there is a line in my screen, on my screen you can't see properly. In the original paper, it is 1,500. In the original paper, it is 1,500. Goodwill estimated 1,500. That is 1.5 million. Goodwill estimated is 1.5 million. When you watch this, you can take your original paper. You can compare with the original paper. It is 1,500. That is 1.5 million goodwill. So 1,500, you can adjust according to new profit sharing ratio. You are given 5:3 to total 10. Then you divide 1,500 by 10, it is 150, and multiply by 5 goes to first partner. Again, divide by 5 and multiply by 3 goes to 450 goes to second partner. 450 divided by 3 multiplied by 2 300 goes to third partner. That is according to their new profit sharing ratio. You can debit Netu 750, Mutu 450, 300 Ganga. If I repeat the same thing again, the calculation 1500 divided by 10, the addition of all profit sharing ratio 5 plus 3 plus 2, divide by 10 multiplied by 5 equal to 750 Netu, divide by 5 multiplied by 3 equal to 450, divide by 3 multiplied by 2 equal to 300 Ganga. Right. Then again, you can divide 1500 by 3, that is their all profit sharing ratio 2:1, and multiply by 1 equal to 500, 500 to 1000, and 500 into 1, 500. Therefore, all profit share ratio, according to all profit sharing ratio, you can credit to partners capital account 1000 and 500. This is the goodwill recording part. This is the goodwill written off part. Right. Then next adjustment, we finished all the partnership agreement adjustment. All other transactions with the partners except the goodwill adjustment are according to their current accounts, right? That means except goodwill, everything should be adjusted in current account, right? Now we can come to adjustment 1 to 6. First adjustment, inventory as at 31st March 2020 was measured based on physical count. That means as they have physically counted, they have taken physical count. That is what they have given in the trial balance 31st March 2020. Normally, if they have calculated cost of sales or gross profit, then we are given closing inventory in the trial balance. That's right. Because we are given cost of sales, that's why closing stock has recorded in the trial balance. Otherwise, normally we are having opening inventory in the trial balance. Right. Second adjustment, the goods drawn by Netu and Mutu during the year were 60,000 and 40,000 respectively. These values have not yet been accounted in the books. 60 and 40, total 100. That means goods drawn by the partners. Partners cannot use business goods or money as they wish for their personal usage. If they have use, we have to consider it as drawings. Here they have taken goods as drawings. Therefore, we have to debit to partners' current account. Say drawings, goods, drawings, and credit to purchases. Here no purchases because they have already calculated cost of sales. Therefore, we can credit to cost of sales. Crediting means we can deduct from this value. The given cost of sales is 1,850. In this value, they haven't included goods drawn by the partners. Therefore, they have overestimated cost of sales. Therefore, we can deduct 40 plus 60, total 100 related to goods drawn by the partner. Then when we produce cost of sales, 1,850 minus 100, net cost of sales will be 1,750 and debit to partners' current account. Here, goods drawings 60 Netu, 40 Mutu. And when it comes to cost of sales, you can correct cost of sales here. Cost of sales within bracket 2,600. Sorry, 1,850. You are given in the trial balance. 1,000. Cost of sales 1,850. From this, you can deduct 100. Then it will be 1,750. It will be 1,750. Net cost of sales 1,750. How did you take? 1,850 given value minus 100. That is addition of 40 plus 60 goods drawn by the partners. Right. The next adjustment, Rithu's loan repayment account balance in the trial balance consists of the loan interest paid till 30th September 2019 and the cash paid to settle 50% of the loan on this date. The interest payable on the remaining loan balance has not been accounted for. Right. That means at the beginning, they have given you 5% loan account as at 1st April 2019, Rithu, 800. Out of this 800, they have paid 50% from the original loan after 6 months. But in the payment, settlement of that, they have included interest related to first 6 months also. When you calculate interest for per 6 months, 800 into 5% into 6 over 12, because 5% interest for whole year, 12 months. If you take half of that, 6 over 12, that is equal to 6 month interest. Oh, you can take 2.5% from 800. That is also equal to 20. That is what they have included in the trial balance loan repayment, Rithu. It is included both loan amount and interest due for per 6 months. Loan amount 50% out of 800 is 400 plus interest due on first 6 months 20. 800 into 5% into 6 over 12 equal 20. They have included both capital and interest portion both in this 420. Right. Then when it comes second portion of the year, we have only 400 out of the 800 loan amount, as they have settled 50%, that is 400 at the end of first 6 months. For the second 6 months, they have only 400 out of 800. Therefore, when you settle interest, you calculate on 400, 5% interest. 400, 5% interest, 10. 400 into 5% into 6 over 12 equal to 10. 10 plus 24 per 6 months equal 30. Total interest due is 30. Therefore, you can deduct interest in the income statement like this. Loan interest 30. You are given 2 marks. Loan interest, that is per 6 months for the whole loan 800, 20, and the next 6 months, as you are having 400 worth of loan, 400 into 5% for 6 months 10. Interest is 10. For the second 6 months, then 20 plus 10 will be 30 total interest. Right. Next adjustment. Nethu has paid 10,000 out of his personal money to renew the trading license of the partnership for the ending 31st March 2020. This has not been accounted for. The business expenses have been made by the owner, Nethu, partner, by using his or her personal money. Therefore, it should be recorded in capital account. It is equal to introducing additional capital and debit to income statement as an expense, because this trading license is expense for the business. Therefore, trading license 10, we can include in the income statement. Licensing fee 10 as a deduction from the gross profit. And also we had to credit to capital account. But here in this question, especially, they have mentioned at the beginning this point. All the other transactions with the partners except goodwill adjustment are recorded through their current accounts. And as they have given this point, we can't credit to capital account what the partner has used to settle business expenses. Therefore, we had to credit to partner's current account. That is 10. Licensing fee Nethu 10. It goes to Nethu's current account. It belongs to Nethu. Right, 10. As it is an expense, we debit to income statement saying licensing fee 10 the expenses, and as it belongs to Netu, then we credit to current account Netu 10 saying licensing fee. Right. Next, the partnership had paid 140,000 for the insurance premium of vehicles for the year ending 31st March 2020, and it is recorded in the operating expenses of the business. However, it was revealed that later that this payment includes an insurance premium of 40,000 paid for personal vehicle of Muthu. Right. The partnership had paid 140 for the insurance premium. It's okay. It is also business expense, no? But they have paid 140 and included in this operating expense, value 2,600. Okay, insurance expenses, they have included in operating expenses. It's okay. But thing is 2,600 is included. The insurance premium 40 paid for the personal vehicle of Muthu. It is included 40 in this 140. Therefore, only 100 can be taken for business insurance premium. Then 100 can be there in this value 2,600. But this 40 paid for the personal vehicle Muthu cannot be there. Therefore, this 40 should be deducted from operating expenses because total of 140 is included in this value. Therefore, 40 is not related to business expenses, that is partners personal expense. It is equal drawings. Therefore, you can credit this value. Therefore, net value 2,560. Operating expenses 2,600 minus 40 drawings, then it will be 2,560. Then you debit to partners current account insurance premium Muthu for 40, like this, insurance premium 40 from Muthu. Right. Next adjustment. Ganga was admitted as a new partner on 31st March 2020, that is last day. Ganga brought 3 million on this date to the business as a contribution to capital and goodwill. That means 3,000 has been brought by Ganga for both capital and goodwill. New profit and loss share ratio among Netu, Muthu and Ganga was agreed 5:3:2 respective. On this date, the goodwill of the business was estimated 1,500. Here, I can't see it properly because my screen has broken. But the original value should be 1,500. We have already recorded that. What the Ganga brought to the business 3,000 is included both goodwill and capital. Therefore, this 3,000 should be credited to Ganga's capital account. Like this, say in cash, 3,000 in the Ganga's capital column. Right. Then we can take trial balance values. Capital accounts Netu, Muthu, 2,000 and 1,000. We can record in the capital accounts like this. Broad port balance 2,000 Netu, 1,000 Muthu. Current accounts Netu 400, Muthu 200. Then we can record like this. Broad port balance in current accounts 400 Netu, 200 Muthu. Then 5% loan we recorded interest, we recorded property sales 6,000. Sales 6,000 in the income statement top value. Sales 6,000. Then cost of sales we corrected. Original value was 1,850. As we had to deduct 100 of goods drawn by the partners, 1,850 minus 100 is equal to 1,750 cost of sales. Then cost of sales 1,750. At the examination, you can produce within bracket 1,850 minus 100 equal 1,750. Right. Next, operating expenses we recorded 2,540. Inventory okay, loan repayment okay, drawings cash 500. We can debit to the relevant partner current account. Cash drawing 500. Cash in hand, cash brought by Ganga, we have already recorded. Right. Now we have completed all the adjustment and appropriations. Then we can find gross profit, sales, cost of sales deduction. You got gross profit 4,250. You can deduct all three expenses, operating expenses, licensing fee, loan interest. Then you take net profit of 1,650. We have to distribute 1,650 among the partners in the appropriation account. Then we already distribute interest from capital 300, salaries to partner 1,200. Then when you deduct 300 plus 1,200, total 1,500 from 1,650 net profit, balance will be 150. This should be distributed among partners, the all partners, according to their all profit sharing ratio, which is mentioned in the agreement. Here, 2:1. 2:1. 150 divided by 3, multiplied by 200. The balance 50 goes to Muthu. Then you have debited here 150. You have to credit to current account, sales share of profit. Profit share 142 54 Muthu. Right. Now you can balance current accounts and take balance. With balance capital accounts and take balance. Right. That is the end of partnership accounts. You are going 20 marks at least within 30 minutes. You have to complete discussion at the examination. For 1 mark, you can take maximum 1.8 minutes.